Welcome to another episode of the Washington State Retirement Planning Podcast. I'm your host, Ethan Meikle, and here we talk all about your amazing Washington State retirement benefits and the best ways to utilize them. Today's video, we're talking about changing Plan 3 contributions. Mainly answering the question I get constantly is, can I change my Plan 3 contributions? So we'll dive into that topic first today. After that, we'll go to our community questions. Today's question comes directly from the Washington State Retirement Planning community. It's so free to join. So if you're not a member there, the link to join is in the description below. I've recorded a 5-hour retirement planning course that is free to you guys, just as a thank you for joining. So the question we're answering today is, I'm divorced PERS 1. Can I add this monthly income to my PERS 2 to increase my monthly income from that plan? So we'll be diving into that question later on in the episode. So with that intro out of the way, let's get into it. Can I change my contribution into my Plan 3 retirement account? This is a question I get all the time, and exactly what we'll be covering in today's video. If this is your first time here, make sure you hit that subscribe button so you don't miss any future updates like this one. So the short answer to this is no. Back in 2015, the teacher's retirement system changed the rules so you can no longer change the contributions into your Plan 3 every year. Prior to that, every January you could change how much money went into these plans. Now, whatever you're currently doing, you're locked into. You can't do more, you can't do less. You have to stay with your contribution. But one exception to this rule is if you change employers. So for example, if you were working in one school district and moved to another, that counts as a change in employment. And at that point, you get 90 days to make a change to your Plan 3 contributions. After that, you're then locked into that contribution until you change employers again. Why is that? Why can't I change my contribution? It's my money, it's my retirement. Why can't I get control of it? Well, the answer to that is the state decided that it was unfair that teachers were able to change their plans, but people in the PERS and SURS system weren't. You see, since they've been able to participate in Plan 3, they've never been allowed to change their Plan 3 contributions. So it was only fair to make the rules the same for everybody. So fortunately for many teachers that were used to having that flexibility every year to make those changes, that no longer exists. You're stuck with what you're stuck with. So for those people considering getting into Plan 3 initially, oftentimes I recommend, if you're going to Plan 3, just do the 5%, lock yourself into the least amount possible. That way in the future, if things change, you don't have to worry or stress about having too much money taken out of your paycheck. And remember that you can always save elsewhere. Plan 3 isn't the only investment account out there. Your school district gives you the ability to save into 403B plans as well as a deferred compensation plan, also called the DCP. So you have other avenues to be saving for retirement outside of the Plan 3 account. So don't feel obligated to max yourself into that 15% just because in the future you want to have that flexibility should things change. Now on to the question of the day. So this person writes in saying that they're divorced with PERS 1. Can I add this monthly income to my PERS 2 to increase monthly income when I'm ready to retire at age 62? So this person's apparently receiving money from PERS 1 currently. They have a PERS 2 pension and they're wanting to know if can they add this pension to that pension to increase that pension's future payout. So the short answer here is no. PERS 2 or any Plan 2 system in Washington State, you cannot add money into it to increase the future payouts. These are defined contribution plans. They're set up in a defined way. They have a set formula. There's no way to manipulate that formula by adding more money to it. The only way you increase your pensions is by either working longer or making more. That's really the only two options you have. The percentage is fixed. You can work longer, you can make more money, but you can't add more money to the system. Or you could look at potentially buying service credits. Some people view that as an option. Whether or not that makes sense will depend on the cost of the purchase, whether or not you have the funds available to you, or if there may be a better option. If you're a PERS 2 member, you still have the PERS 2 annuity. That might be a better option than just buying straight up PERS 2 retirement credits. So I would view those two options if you are trying to increase your monthly income, but you cannot just add it straight to the PERS 2 to increase it from there. But a PERS annuity or potentially purchasing service credits are two viable options that you could look at. Now they do require lump sum contributions. You can't just do like a monthly, installment plan into it. You need to have cash on hand or money available to move into those type of plans. So if that is a plan, you could start saving some of that PERS 1 money into some type of an account to make the purchase. And if you choose to go that route, keep in mind that you can only use a certain amount of cash when buying these plans. There's actually a federal limit of how much cash can be used to purchase plan. Oftentimes, in order to make the purchases, you have to use money from other retirement sources, like other retirement savings accounts, like an IRA, 403b, deferred comp even would work in many cases. So just understand that even if you had $200,000 of cash, you may not be able to use all of that to purchase one or the other of these plans. So you want to check on what the current limits are for using cash to purchase these type of service credits or annuities based on the current federal law. All right, so I believe that wraps up today's episode. If you haven't joined our free Washington planning community yet, the link to join is in the description below. It's free to join. There's retirement courses in there. I've got free resources and handouts for you guys as well. I'm always in there updating, answering questions. So if you want more access to this type of information, you've got specific questions you want to address as well, feel free to drop them in the community chat there, and we can talk about it either in the chat or I can even bring it up in a future podcast episode. So make sure you guys are part of that community. And until next time, always remember that your future depends on what you do today. All right, before I sign off, just a real quick legal disclosure that we're required to say as licensed fiduciary advisors. So remember that this is a podcast. It is designed for educational and entertainment purposes only. I don't know you personally, therefore I cannot give you any personal advice. So please don't take anything that we say on the show as being personal, financial, legal, or tax advice. If you want that kind of stuff, make sure you seek out a professional so they can help you with the strategies and investments that are right for you. Also, please remember that despite the name of our show, we are in no way associated with Washington State or the Department of Retirement Systems or any other Washington employer. We're a private-owned firm that specializes in working with Washington State employees, which is why we know so much about this stuff. So remember, we don't work for the state in any way, shape, or form. So please don't confuse us as being an official representative of the state. All right, that's it for the legal stuff. I'll catch you guys all next time.